One of the worst mistakes beginning traders make is to not pay enough attention to their trade entries. Neglecting the importance of a good entry and exit can make a huge difference to your bottom line. In this video, you will learn all the do's and do nots of opening and closing trades. Before we get into the nitty-gritty of actually setting up the best possible trade order, let us first talk about how to set your trades up for success. One of the biggest mistakes that you can make is to not have a clear trading plan. Without a plan, you're basically trading blind. To help you always have a trading plan from now on, I'm going to present you a step-by-step checklist that walks you through every aspect to consider before sending any trade order. If you go through all these steps, you should never again be in a trade that you don't know what to do with. Let's now go through this trading plan template. First of all, I recommend taking a look at upcoming events. Even though this doesn't directly affect your trade, looking at future events before opening a trade can save you from unwelcome surprises. Are there any upcoming dividend payments, earnings, or other upcoming events that might clash with your trade plan? Around these events, stocks often behave differently than they normally would. So either be aware of this or avoid trading through these events. Next up, define your risk. Never open a trade without knowing your max loss. Way too many traders don't do this, even though this is a must for you to be able to manage your risk. Besides defining your risk, you should also define your reward. Have a clear profit target that tells you when to take profits. Without a clear profit target, it's easy to tell yourself to wait for just a little more. Doing this will lead to winning trades turning into losing ones. After defining your max risk and max reward, it's very easy to calculate your risk to reward ratio, so make sure to do exactly that. Actually calculating and seeing your risk reward ratio will give you more insights into the payoff profile of your trade. A good rule of thumb is that your risk to reward ratio is better than 1 to 2, but note that as an options trader, you should also take the probability of profit into account. It's totally okay that your risk is greater than your reward as long as your probability of profit is high enough. Furthermore, you should also define the time frame of your trade. Is it a day trade, swing trade, or long-term investment? Obviously, you don't need to know the exact time that you're going to be in the trade, but you should have an estimate of the trade's time frame. Inside of your trade plan, you should also have a concrete entry plan. This plan should entail your entry price, position size, and how you want to open your trade. Do you want to open the entire position at once or slowly average into it? Just as important is your exit plan. This should describe how you're going to close your position. This could include possible trade adjustments, your trade exit price, and exit trigger. The most obvious exit trigger would be a certain price level, but it certainly isn't limited to that. You could, for instance, also use a time frame, probability of profit, certain indicator values, or the P&L of your position as an exit trigger. Moreover, your exit plan should include how you're going to close the position. Last but not least, a trade plan could also include other notes such as the motivation behind the trade, your directional assumption, a trade description, or something else. Hopefully this template gives you an idea about what a good trading plan could look like. If you want to use this specific template for your own trades, check out the link in the description box below to download it. It's very important to create such a trading plan before you open your trade. This allows you to stay rational and clear-headed. As soon as you open your trade, you lose the ability to evaluate the position objectively. Furthermore, it's a great idea to actually write down your trading plan. Especially for beginning traders, this is a good exercise. With time, you will be able to do this in your head, but like everything, this requires practice. So even though writing down your plan takes time, it will force you to really think about your trade. This is also a great counter against impulsive trades, or as I like to call them, gambles. If you ever again find yourself in the situation that you have no clue what to do with your trade, just take a peek at your trading plan and you will see the answer to this question. After you close a trade, you should always ask yourself, did you stick to your trading plan? If you didn't, why not, and what could you do better next time? If you did, was it a good plan, or how could you improve the plan next time? Asking and answering these questions will allow you to continually improve your trading plans and thereby your trades. A great place to answer these questions is in your trading journal. Having a good trading journal is another great way to evaluate your trades without falling prey to cognitive biases and subjectivity. If you currently do not have a trading journal, I highly recommend starting one as soon as possible. If you need some guidance on how to create the most effective trading journal, check out the link to my guide in the description below. With that being said, let us now look at how to set up the best possible trade order. Even though setting up an order might seem like an easy task, there still are many things that you can do wrong. For example, the biggest mistakes that many traders make is using market orders. A market order gives you the next available price. This will get you filled very fast, but more often than not, the price will be bad. So what should you do instead? Instead of market orders, use limit orders. Limit orders allow you to set a fixed price at which you want to get filled at. Either you will get filled at this price or you won't get filled at all. As long as you don't set your price too aggressively and the security is liquid enough, you will get filled at your desired price anyway. But even if your order isn't filled, it is often better to miss a trade than to accept a bad entry price, since a bad entry price would mean more risk and less profit potential. To choose a good limit price, it is important to understand how the bid-ask spread works. So let me quickly recap this. The bid price is the highest price a buyer is willing to buy the underlying security for, and the ask price is the lowest price a seller is willing to sell it for. The bid-ask spread is the spread between these two prices. To get filled as fast as possible, you need to move closer to the ask price when buying and closer to the bid price when selling. For most securities, however, these prices change all the time. Therefore, you can often get filled at the mid price. That's also why I recommend always setting your limit order price at the mid price to begin with. If this doesn't get you filled, you can always readjust later on. Ordering at the mid price can save you thousands of dollars over the long run. Last but not least, I recommend setting your orders to expire at the end of the current trading session. But if you don't want this, you can always choose a good till cancel order. This order type will stay active until it is either filled or you cancel it manually. This is especially useful to automatically take profits on a given trade. For instance, if you know your profit target, you can just send out a good till cancel order as soon as you open your trade and let the order sit. The same can be done for the downside with a stop loss. An alternative to good till cancel orders are good till date orders. The only difference between the two is that good till date expire after a certain preset date, whereas a good till cancel order has to be cancelled manually unless it's filled. Some brokers even offer bracket orders. These are also known as one cancels other orders. Such an order allows you to send out two orders, one to take profits and one to cut losses, and as soon as one is filled, the other one is automatically cancelled. This is a great way to automate your trading plan. It's hard to make discretionary trading more mechanical than this. Last but not least, here are some tips to get filled faster. First of all, make sure to trade liquid securities. If you aren't trading liquid securities, fills will take much longer, and even worse, you will leave a lot of money on the table due to a wide bid-ask spread. If you're trading options, you could analyze option chains for options with high open interests and volume. Getting filled on these options is much easier than on other ones. The next tip would be to scale into your trades. Instead of opening your entire position in one order, break it down into multiple smaller orders. This can decrease fill times dramatically. Note that you should only try this if your broker's commission structure doesn't charge you too much for each order. Otherwise, placing orders at round numbers can often help you, since round numbers typically attract much more stop losses and limit orders than other prices. If none of these things help, you could always move your price closer to the bid or ask price, but only do this if the new price is still good enough. With that being said, let me quickly sum up some of the most important points of this video. Firstly, you should always have a clear trading plan and make sure to create this before you open your trade. If you don't know how to create a trading plan, just use my template. Furthermore, make sure to keep a trading journal so that you can track your progress and learn from your mistakes. I also have a guide on this that you can check out through the link in the description box below. Otherwise, don't use market orders, but instead use limit orders. A good limit price to start with is the mid price. Last but not least, focus on trading liquid securities with high volume. Otherwise, you're just throwing money out of the window. I really hope you enjoyed this video and learned something new. If you did, make sure to let me know in the comment section below. Otherwise, don't forget to smash the like button, subscribe, and turn on the notification bell. Thanks for watching.